Welcome back to the monthly portfolio update. I hope you'll find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands on Friday, November 1st, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your responsibility to do your own research before investing. Later, in today's bonus section, we will also talk about the power of compounding and how it can help your portfolio. But first, let's quickly look at this month's portfolio activity. In October, I continued dollar cost averaging for Norofer, which is optically cheap and currently expanding its capacity in US and Brazil, that are big markets with lots of money, and also bought some new Fidelis Romanian government bonds, two different maturities, the idea being, since inflation went down, rates will go down as well in the future. Even though a second leg of inflation is very likely, I still expect it to be somewhat less powerful than before. Last but not least, I shuffled around a little bit my altcoins, earned a couple new ones, and exchanged some into Bitcoin and Sol, my two main crypto holdings. In terms of cash flow, I got paid my last Tezaur Romanian government bond coupon, and I also received a very small S&P 500 quarterly dividend for Q3. Even though it was not much, I kept my expenses low this month, as well as we'll see in the portfolio part, the lack of cash is not a problem currently. That being said, the portfolio as of November 1st, 2024 is looking like this. Pause the video if you want to analyze each investment in detail. One major change is that I aggregated all Fidelis Romanian sovereign bonds in one single entry at row 36. While I have multiple maturities, about 8 or 9 right now, in different currencies, Romanian lei, euros, etc., different expiration date and different returns, it was getting ridiculous to have that many entries which are basically the same exposure with slightly variable characteristics. That being said, the current pyramid allocation portfolio looks something like this. Overall, the portfolio was up 0.78% for the month, mostly due to the strong crypto comeback. Year to date, the portfolio is up 8% without expenses, and also I actually pushed through a major milestone in assets under management this month. For next month, there is a bit of fog of war, and I expect a weird month with elections in both Romania and the US, so it's going to be unpredictable and fun. Anyways, it shouldn't really matter long term because, as we'll talk about the solution in the next section, these short term things are not as important. But before going to the next section, if you are interested in the subject matter, you can leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we'll be talking a bit about the power of compounding. So without further ado, let's get into it. The quote, "Compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it," is often attributed to Albert Einstein. So what is this magical compounding of interest? What does it really mean? The definition of compounding is the process in which an asset's earnings from either capital gains or interest are reinvested to generate additional earnings over time. Growth is calculated using exponential functions and occurs because the investment generates earnings from both its initial principal and the accumulated earnings from preceding periods. Most people were introduced in high school math class to the probably fictitious story of the invention of chess. A king from somewhere around the Middle East or maybe China was bored with all the games in the kingdom, so he held a competition for people to invent new games, and the winner will get anything he or she wanted. The winner was the inventor of chess, a sneaky fellow apparently, and he asked for a simple reward: 1 grain of rice on the first chess square, 2 on the second, 4 on the third, and so on, doubling the amount of rice every square. The legend says that the king was surprised he didn't ask for gold, but was quite happy that the inventor asked for so little. But when they started filling the bags, they realized that there was not enough rice in the kingdom. After that, the king either executed the inventor or took him as an advisor, or maybe both sequentially. There are more versions to the story, but the core is always the same. People underestimate the growth of an exponential function. The math is very simple. The total amount of price gains is 2 at the power of 0 plus 2 at the power of 1 plus 2 at the power of 2 plus 2 at the power of 3 and so on until plus 2 at the power of 63, which equals like 2 at the power of 64 minus 1. Why 63? Because there are in total 64 squares on a chess table and the first square has only one grain. Now the total is a very large number. It's called a 64th Mersenne number. I cannot even pronounce it. Now, let's look at a real-world example. We have a simple two-stock portfolio worth $2,000, where we put $1,000 in each asset today and hold it unchanged for 25 years, and at the end we notice that stock A grew by an average of 15% a year, and stock B dropped by an average of minus 15% a year. After 1 year, the portfolio will have a profit of $0. $2,000 equals $1,000 plus $150 plus another $1,000 minus $150, it's equal to $1,000. But how much do we have at the end of the 25-year period? A, 0, B, $1,200, C, $33,000, D, we lost money, E, we are richer than Jeff Bezos. Pause the video and take a minute to try and answer these questions to see if you get compound interest intuitively. Okay, ready for the answer? The correct answer is C, a little bit under $33,000, to be more exact, $32,919. Why is that, you might ask? Well, because compounding is convex on the upside and concave on the downside, meaning when you lose less and less money. In 25 years, the stock that drops will asymptotically go to 0, so we'll have 850 left in year 1, 720 in year 2, 610 in year 3, and so on, getting closer and closer to 0 but never reaching it. And when you win more and more money. So the stock that goes up will be $1,150 in year 1, $1,322 in year 2, $1,520 in year 3, and so on, because now the interest is also producing a 50% return, not just the principal. You can play with the compound interest calculator in the description to see for yourselves. So, we know that compounding is very important. So, how do we compound our capital to become wealthy? Famed investor Monish Pabrai mentioned that in order for compounding to help us get rich, there are 3 variables that are very important, but we only need 2 of them to be true at the same time to become rich. First, the size of the initial capital. Second, a long investing time frame. And third, the average rate of return. Meaning that if you have a lot of capital to start with and a long investment time frame but a low rate of return, you will still be rich at the end. The same, if you have a short investment time frame, you can compensate it by a large average rate of return. Or if you have little capital to start with, you can compensate by having a high rate of return for a long period of time. And humbly, I will add a number 4. Don't experience any wipeouts events which might be automatically included in Monish's 3 rules. You can really have a long investment time frame or a high average rate of return if you get wiped out, but just wanted to make it clearer since you will need to take this in consideration at the beginning of the period, not later on. So, in order to win at investing, you don't sell your winners and let them compound in peace. True compounders are very hard to find, so taking profits early, while it might feel good, it doesn't help the cause at all. Anyways, that's all for today. I hope you liked the video, and if you did, please don't forget to like and subscribe. See you next month. Sayonara.